All right, everyone. Welcome once again to the Faces of Business. I'm your host, Damon Pistolka. And today with me, I'm excited because I've got a very special guest, Thomas Campbell. Glad to have you here today.
Glad to be here, Damon. Appreciate it.
This is exciting for me, Thomas, because I from time to time I get to interview business buyers, and you are a great example of a business buyer, and quite honestly, some that our clients tend to work with. So it's really exciting for me to be able to let you share a bit about your background, and kind of how you ended up deciding to buy a business and the process, and then some of the experiences you've had with that.
Sure. Yeah, I would love to.
So tell us about your background here.
Okay. Well, my background, I guess, starting from the beginning, I'm a Navy brat, so bounced around a good bit growing up, but Charleston, South Carolina is kind of home, where my folks are still. I got my undergrad at Babson College up in the Northeast, which for those who aren't familiar is, a small school that kind of specializes in business. From there, I kind of graduated right in as the Great Recession was kicking off in 2008. So, whatever hopes and dreams and career paths I thought I might have pursued as a bright young undergrad kind of went by the wayside pretty quick, and ended up actually kind of as a financial analyst working in real estate for a minute. And it was a little bit of a winding path to get where I am today from there. I, ended up transitioning to helping out a large Navy branch of the, Navy there in Charleston with migrating their enterprise management systems over to SAP.
Okay.
So I was in charge of managing all their financial data, which a lot of responsibility for, I guess to trust somebody who's pretty young and inexperienced, but managed to get through it. And they hired me on briefly, but to be a full-time government employee towards the end of my contract. But by that point, I'd also started to send out feelers to the folks that I'd worked with before in real estate. And that's kind of how I got on the path I currently am on. I ended up connecting with some startup investors who had backed a alternative energy company focused on different technology applications within oil and gas and alternative fuels. One thing led to another, and we purchased a tire recycling factory outside of Charleston, with the intent of using the tires as kind of fuel for some of the technology applications that we had in mind. I was a controller for this tire recycling plant. It was one of the largest in South Carolina at the time. Didn't know the first thing about being a controller, but had to kind of learn on the fly. And there was a lot to cover, everything from chasing down accounts receivable to, listening to vendors asking to get paid, making sure payroll was met every week, and likewise making sure that the equipment was all in good shape, that the trucks were going out, what have you. So, trial by fire. And, within a couple months, though, of buying the business, we were approached by a Canadian company looking to buy us out and migrate their own manufacturing from China to the United States. We kind of were operating on basis of good faith, and I was kind of feeling like, pretty good about it at first, but, they made us a lot of promises. They told us that they were going to close within a few months. They asked us, in order to get the deal done, they needed us to ramp up capacity and start investing in some of the, new equipment and what have you, which we did. Unfortunately, the check ended up being in the mail for about a year. And meanwhile, we had kind of overextended ourselves by plowing that operating capital back into growing the business. So, I spent about a year kind of sleeping at the plant and going without pay, trying to, make sure the payroll was met and that, the lights were able to stay on until the deal closed. And it was a pretty rough, experience for somebody my age. not one that I definitely don't care to repeat, but the experience was pretty invaluable. And from there, went up to Wilmington, got a job as a controller for a apparel manufacturing business doing screen print and embroidered apparel. While there, co-founded a yoga studio of all things, not too far away in Carolina Beach. Got that business humming as much as I could, automated a lot of my responsibilities. We're using different technologies and what have you. So that really kind of opened my eyes to a lot of the efficiencies that could be gained and from just instituting good standard operating procedures and some of the newer technologies that were coming out. And from there, took that experience to a women's shoe company based out of Charleston, Charleston Shoes. So some of your listeners may actually know of this company just through their spouses or they themselves being fans. But at any rate, they've got, a couple dozen locations throughout the West Coast and East Coast, Florida, New England, Manhattan, as well as, Charleston. And when I came on board, the business, was owned by a young woman who knew a lot about designing and selling shoes, but didn't have much in the way of traditional business background. And so it had done about $4.5 million the year prior to my coming on board. But unfortunately, my predecessor had taken advantage of kind of some of the lack of controls in place to commit about, better part of $500,000 in credit card fraud.
Oh, wow.
Destroyed the books on the way out. And, so when I came on board, commissions and payroll taxes, what have you, hadn't been paid in months.
Yeah.
There was no bookkeeping. So pretty much immediately was kind of triage type situation where I, had to rebuild the books from scratch based on bank statements, had to get new payroll systems and, timekeeping systems implemented within the first week, get everybody caught up. And then from there, one blessing certainly was that the business was growing rapidly. So, everything had been run on pen and paper. They had no idea what they had in inventory or really anything. And so that was the next thing. So in the first few months, I rolled out new point of sale systems, inventory management systems, what have you, for their e-commerce, wholesale, retail business lines of business. And over the next couple of years, kind of helped grow the team and handled everything from kind of finance, operations, technology, marketing, you name it, letting the owner kind of focus on what she enjoyed doing, which was, like I said, designing and selling shoes. And grew the business from 4.5 to, by the time I left, 12.5 million in 2 years. Wow. Had to backfill me. We hired a, Harvard MBA president with a bunch of years in the apparel industry to kind of take over my role from the strategy side of things, as well as a financial manager and, tech admin. So basically replaced my role with 3 folks. From there, got my MBA at UNC and, didn't really know what I wanted to do with my MBA at the time. I felt, though, that I'd kind of reached the pinnacle of where I could get within my current career path. I was CFO, COO, for lack of a better term, of a small business. I wanted to continue to progress and, learn, but didn't know what that looked like. The fact was that larger businesses didn't really appeal. I liked the thrill and motivation that being in a small business provides, the feeling that your work, your effort matters, and having that laundry list of 101 things that need to get done ranged from urgent to needed to be done yesterday on, fires that need to be put out. And so, went in kind of a little bit blind as far as, what my next, steps in my career would look like. thought about consulting and a few other things, but one of the clubs there at UNC invited a couple speakers, the private equity club, which I had just kind of joined for, to see what it was about. And one of the speakers happened to be one of the partners currently backing me at Search Fund Accelerator. And they introduced me to the concept of search, about how, basically young, motivated talent with typically with MBAs, but not always, to try to attract them away from these high-paying six-figure jobs being thrown their way by Fortune 500 companies. This model had kind of been created to incentivize them to buy small businesses with, investor capital and, receive a CEO compensation and responsibilities, but also have some sweat equity for their efforts. And for me, it was just kind of like a light bulb going off. I chased the guy down the hallway after the the talk, asking about kind of next steps and how I was going to go about learning more. So was given a few resources, including kind of a Stanford primer on search funds that they release every couple of years, detailing kind of all the trends within the space, and went to a Harvard conference later that fall, where I met a number of other individuals kind of within the search fund community. And it's kind of a funny story though. While there was nobody else from UNC there, and there was nobody else from Duke. It was a bunch of MBAs from the Northeast that were attending this conference. But for one guy who's standing, I saw this one dude standing off in the corner at the cocktail hour afterwards. I wandered over to introduce myself, not knowing many people there. And lo and behold, he was the only other person from my state. He was a Duke MBA and he was pursuing search. And, we got to talking and kind of bemoaning the fact that the concept, the model of search just didn't really, wasn't really popular, well known within the Southeast.
Yeah.
A lot of the conferences are, Booth up in Chicago, as well as Harvard, and then Stanford out on the West Coast.
Yeah.
And, we decided, if anybody was going to change it, might as well be us. So we went ahead and got the ball rolling on starting a Southeast Entrepreneurship through Acquisition conference there at Duke University. Through that, got to know a lot of folks involved in the community even more, investors, searchers, CEOs, who had formerly been searchers, as well as, folks who support that community, attorneys, accountants that advise on the diligence that's involved, which I'm sure we can get into. Yeah.
Well, it's awesome listening to your background, Thomas, because and I'll go back a ways, because first of all, people, unless you've been in a turnaround situation like you were in a couple of them, and that's what I did for the vast part of my career for investment owners, is our turnarounds. And people that, if you've never been in those situations, people don't understand why you would ever want to go into it. But the thrill of doing it and being successful in it, it's addictive, because you can, the amount of change that you can really make by getting people aligned and getting systems in place and getting things going is really incredible. So that's one of the things that's pretty cool about it. Sorry, I didn't have the camera set right at the beginning, but the other thing that does for you, though, those scrappy situations, where you have no money, but you have to still do it, and you still have to execute and all the things you have to do, that prepares you for being an entrepreneur later down the road. It really does. I think about that, and I want to make sure that I at least say it, because that kind of thing teaches you invaluable lessons that take some entrepreneurs years and years and years to figure out. But when you drop into those situations, like you said, it's trial by fire, and you learn it tomorrow, if not today, your second day.
Yeah, no, they don't teach you in business school what to do when your foreman disappears on the first day of deer hunting season, or, that accounts receivable check that you were waiting on to make payroll is 30 days late.
Yeah,
You know,
exactly.
yeah.
Exactly. There's some of those things that you learn how to do. And like you said, you brought up a couple times of, people calling wanting to get paid, or people you trying to get payment. That's just not a lot of, and when you understand that, you really get to understand that, a business is almost like a human being where you've got to feed it and there's
Hmm.
things that come out. And it's really interesting when you can have that type of experience. And I can see now how this translated for you into becoming a search fund buyer. And I can also see then how your experience gave investors behind you now confidence in backing you, because someone that went to school, went out and got a job at a big Fortune 100 company and decided to do this. Hey, there's nothing wrong with that. And deciding to become an entrepreneur, there's nothing wrong with that. But I think if something doesn't go exactly right, you've got a leg up on them and figuring out how to make it right.
That's the idea, and certainly, operating experience is invaluable. And a lot of folks have great experience working at these larger companies. Some of them investment banking or finance or whatnot. But the folks who are backing me in particular, they were very interested in the fact that I had real operating experience, both in terms of managing large teams of people, also just, rolling with the day-to-day fires that just happen, and
and I think this is a great. I mean, I'm just so thankful that I get to talk to you today, because your experience is even better than I thought as we talked after the first time. But the thing that most people don't understand is you have to sell yourself twice to become a search fund buyer, like you're doing you have to sell yourself first to the investors that say, yes, if you find the right opportunity, we will do that. And then you have to sell yourself again to the owner and the investors to back you in a specific business. The owner that's selling the business and the investors that's going to invest behind you in that business.
Absolutely. Yeah. And that's one of the things is, like, these investors, they're putting a lot of money at stake. And the worst case scenario for them is a failed investor. A failed company, a failed
company. A
bad buy is the worst outcome. A failed search, it happens. Nobody wants it, but that's kind of, the expected risk. And that a failed search meaning just simply, somebody in my shoes who, puts a lot of time and effort in, but comes up short and just for one reason or another doesn't find a company to buy. But if you buy a company and, those investors, they want to make sure that whoever they're putting in charge knows what they're doing, and, because they're trusting them with a large check.
That is so key. And I think that's one of the things that when I'm working with business sellers, I am always trying to have them put themselves into the buyer's shoes, because an owner of a business that sells it, say I've got a $10 million HVAC company and I've had it for 25 years, and I started it in my own truck, or I bought a small business and grew it up, and I've got this big. I don't have debt in that business anymore. Probably not much, maybe a little bit. And I don't really, I don't have that kind of debt load that you're going to have when you buy a business, because not if I walk in and have to pay $6, $7 million, $5 million, whatever the number is on that business, I have to pay that back. I have to, I got a reasonable time to pay that back. Now I've got that chunk of money comes out first every month, and you got to, and that starts to really eat into what you can actually pay for a business. And I look at this and I see the worst thing that can happen are public companies doing deals in spaces that you're going to try to buy in, or we're going to try to have people sell businesses in, because they don't bother to research the fact that private or public companies are valued much higher because they're public, and the way that the sizes and everything else. But getting into that buyer perspective is something I'd like to talk about a little bit, because, you have a much different profile and a different look at the way the cash from a business with, because just for example, if a business is making $1 million and you have to pay 5 million, that debt load right off the bat is a pretty good chunk of money that comes out every month. And that's
Damon?
something that yep. Are you still there? Oh, you cut out for a second. No worries. We're back.
Okay.
But,
yep.
You as a business buyer, that, if you're buying $1 million EBITDA business and say it's 5 million, you are not the owner sitting there. They're pulling their income out of that business, or is setting in the business, whatever. They're not paying that loan part of your buy, but you coming in as the buyer, now you have to pay what, 2/3 of that of the cost in a loan.
Yep.
That's going to have, it's got principal and interest payments like everything else. So you coming into that business, the cash flow looks much different, because there's a chunk of that cash flow is gone that owner is sitting there today that's going to sell the business has available to them.
Absolutely. Yeah. And I mean, so that's a big part of it. You basically, to break it down a little bit further on that point, if you've got really 3 different types of individual buyers, right? You've got your, self-funded buyer. And these are folks who have either been relatively successful in their own right and have some cash set aside that they're looking to buy a business and, kind of get back into it. Or they may have another stream of income, either through their spouse or through, military benefits, what have you. And oftentimes they're going to be looking at these businesses with an eye towards financing it through an SBA loan. And for them, the risk is pretty palpable, because there's a personal guarantee on that SBA loan. If the business fails, they potentially lose the house.
Yeah, exactly.
So their families, they and their families' livelihoods are very much at stake. And then likewise, you've got 2 other kind of search fund individual buyer types. One being traditional, where they go out and they raise equity from a bunch of investors, sometimes institutional investors, sometimes a bunch of wealthy individuals, usually a mix. And then, key difference there being, though, that when they do find a company, they have to raise that equity to buy the company from that group of investors. But in the meantime, they're at least, they are able to raise that initial small fund to pay themselves a salary and, live somewhat comfortably, pay their, team of analysts and interns, office space, what have you, and diligence costs.
Yeah.
In their case, the debt that is being put on the business is oftentimes going to be senior debt from just a traditional bank that they don't have a personal guarantee for.
Yeah.
And as well, usually there's a certain amount of seller debt, which, point being, though, is that, and I guess the third group I should mention is actually the path that I'm going, where you have a sole sponsor, a single either family office or, for lack of a better term, kind of group of investors structured like a private equity group, who are funding your search and funding the acquisition.
Yeah.
There's a number of advantages and potentially disadvantages to, the different models that we can go into if you'd like. But point being is that in every case, there is a tremendous amount of risk that we're having to judge, and, both in terms of the ability of the business to finance that debt, because if it doesn't, if it has a bad year, it can be a really bad year.
Yeah.
And, basically searchers or individual buyers, they're putting their life on hold for 1 or 2 years. They're kind of putting their entire lives in limbo. They don't know what kind of business they're going to buy. We don't know where it's going to be, and we don't know if it's going to be successful. So if we make a wrong move, if we buy the wrong business, that's a serious amount of years of our lives, and as well, capital from friends, family, investors
Yeah.
that we've essentially lost, as well as our own, having to kind of start from scratch in terms of our own livelihoods.
Yeah. Yeah, that's a great point, because it is, and I'm glad you touched on that a little bit from a personal side of what the buyer, search fund type buyer goes through, because you are literally in a large private equity firm. They've got people that are searching for businesses every day, that are going out to conferences, that are doing the email campaigns. And, every business owner that's listening to me right now, I bet if you've got more than a couple million in revenue, you've been hit by these emails of people trying to market to buy your business. That's what they've got. They've got those cadres of people that are doing it. But in the search fund case, a lot of your work is individual, and you have more control over a small team of people, or just sometimes themselves looking for businesses that they want to buy.
Absolutely.
Yeah. We got some comments here I want to share real quick, Thomas. I think Jeffrey Graham put this in there. He's someone I know that he's been he's been a private equity CEO before, so he's been in the trenches and out of the trenches. So it's good to see that. And he also, in that process, he was talking. I think this was when we were talking about raising capital. He's raised capital too with people, so it's pretty funny. And then Majid, another friend of mine in Las Vegas, there, he's just saying he loves the conversation. So thanks, guys, for listening. Love to hear it. But Thomas Campbell here with me here today. It's awesome conversation about this so far, man. And I just love that look you just gave us into the different types of buyers, because I can't emphasize it. Couldn't find my word there. I can't emphasize enough with people that are looking to sell a business, the importance of reducing as much risk as they can out of their business, because you, as a buyer coming in, your risk profile is completely different. Like you said, you're laying, couple years on the line just trying to find that business. And then you're laying out, in an SBA situation, you could be on the line for the loan. And even if you're in another kind of situation when you're not having a personal guarantee, it could literally ruin your career by going out and doing one of these bad and not making it in that business, and the investors losing their money with a bad purchase. So that is, I just can't emphasize that enough. I'm just going to say the same thing again, because I want people to think about that if you're considering the sale of a business that's sizable, because that is something that, customer concentration, the owner being too much in the business, not having duplicate resources or too dependent on something. But we'll get into some of that stuff. But those are the kind of risks that you have to look in. Or if I'm 100% of a market in a small area and I can't expand, growth and just, there's so many things. But so you've been looking for a while now. About a year. So this is where the fun questions come in. I really think, the stuff you've shared so far is awesome, dude. I really appreciate that. But what I was wondering about is just roughly how many companies have you looked at?
Oh, man. Okay. Well, it depends on your definition of looked at. In terms of having had conversations with,
let's just start there.
Okay. So I probably have, give or take, about a dozen conversations per week. So if you want to think about that, that's about, let's say, 500 to 600 conversations over
there you go. 500 plus. That's good.
Yeah.
That's good. That's a good number. So then, out of those 500 conversations, how many did you get to the point to where you signed a non-disclosure agreement and actually looked at them? Just roughly again.
Yeah, man. So it's actually two steps in the process. Signing a non-disclosure agreement is the easy part. And I probably have done maybe, 75 to 100 NDAs.
Okay.
And that probably includes brokered deals. Maybe more than 100.
Yeah.
When you throw brokered deals in there. But the hard part is, you can have an incredibly good conversation with a seller. You think you're clicking, the seller is motivated, you think it's a great company, you're interested. You send an NDA and you wait to hear back, in crickets, nothing. You ping them again, a few days later, maybe a week later, and maybe they say they're working on it, maybe they say nothing. Like you just, and certainly I understand it from the seller's perspective. They're running a business, they've got a life to live. It's busy, and unless you're feeling really pressured or motivated to sell the business, you got other fish to fry. I get it, but certainly from my perspective, it's one of those things where it's a little soul crushing when you go from a high of thinking, oh man, this could be the one, to just nothing.
Oh, yeah. Yeah. I like that.
Yeah. You very quickly learn to temper your expectations.
Yeah, no doubt. No doubt. That's great too. And I'm sitting here looking, I think I can't see who's comment. Oh yeah. Because Jeff said again, because he's been through the deal process, deal fatigue is real. And that's a good one to add to it. But that's a great way to describe it, is because you do. I mean, you are potentially finding something that could last a long time and be a great career move for you. And you're investing a lot emotionally and time wise in the beginning, and to get ghosted like that's got to be pretty. It's something just like in a sales process, you have to get used to it and realize it's part of doing it.
And, I think I touched on this earlier, but, I think that's one of the hardest things for me is, like I said, I'm used to high pace, high pressure, working in a small business where I'm constantly doing things and seeing real results for my efforts. And, with search, I'm sending out hundreds of emails per week. I'm having, dozen plus phone calls. I'm working on financials. I'm doing a lot of work, and, I may go a few months and not have a single thing get close to an LOI. And it's just, it feeling like you're doing all this and not making any headway is, it's very demotivating. And that's probably been one of the hardest aspects of doing search, I would say. One that I definitely underestimated is just, you think about the actual work itself is not that rough. It's the, feeling of just not getting anything for the work that really, really is tough to get over and keep pushing, keep going.
Yeah. Yeah. Oh, I bet. It certainly would be, there's not many people that send hundreds of emails and have dozens of calls and continue to do that. And that's why I think that successful search fund buyers are the ones that really will end up being pretty decent business owners if they get into the right business, because to be that persistent, you're gonna probably be able to be pretty persistent in your business too.
Well, it certainly has taught me a few things too about, I thought I knew a good bit about sales and marketing. This has certainly added a few tools in the toolbox, I'd say, in terms of just persistence and, how to go about reaching out to, develop a sales pipeline.
Awesome. So then when you get down to it, you are pretty excited because you've got a couple that are might be getting closer into it. So this is something we get in. So let's back up a little bit and just what kind of businesses were you looking for? I forgot to ask you that earlier. So
I've got a little bit, as kind of touched on, a little bit of a varied background, which is somewhat unique in that a lot of searchers, they have experience that's specific to a certain type of industry, be it medical or engineering background, what have you. So in my case, that's been kind of a blessing and a curse in that I've kind of had a little bit of a agnostic approach. And, I can have a conversation with a lot of different business owners and relate to them in some form or fashion, because I've, seen a lot of what they've seen in either on administrative functions or marketing or, somewhere along the line kind of touched on the issues that they've had to deal with in the course of their career.
Yeah.
But to put a finer point on it, I'd say that, I've looked heavily into, technology-enabled asset management. So using RFID and barcodes and other technology to kind of track where your inventory is, your forklifts, your trucks, what have you. I've also looked pretty heavily into some of those inspection companies that may use similar types of technology to manage inspection data for the companies that that for their clients.
Okay. Very cool.
I've looked into along the same lines, like emissions testing and kind of compliance for oil and gas and chemical refineries and infrastructure.
Mm-hmm.
But a few of the things that all these different companies or industries have in common is typically really sticky revenue and potential growth opportunities.
Yeah.
So when I'm looking at an industry niche and trying to judge if it's worth my time, that's one of the biggest priorities is how, the quality of the revenue, how risky is it? Like you touched on, customer concentration, how recurring is it? Do I have to every year go out and, find new projects to make sure I hit the same level of revenue as I did last year, or do I wake up January 1st feeling like I've got 95% of my revenue spoken for already?
Yeah.
So there's a lot of other aspects certainly that goes into it, but that I would say is probably the top.
Yeah. And that's something that we've, because we run into it on the sell side, helping owners get their businesses ready to sell and selling them is that if you're in a business for 20 years, you can have a 20-year relationship with a customer that grew from very small to being a very significant part of your business, 70, 80% even sometimes. And it's not that risky to you because that happens over time.
Yep.
But someone walking in and seeing that's almost unacceptable. I mean,
Absolutely.
You just can't take that kind of risk.
No,
but one walking away.
And also to that point, nor would the bank that's underwriting the deal.
Yes, you're right. You're right.
So the point being is, I'm typically looking at a lot of risks can be mitigated. There are things that can be done to try to reduce it, or at least game plan around what happens if the unfortunate event occurs. But if you have a risk that is existential in nature, like if that customer that you're referring to decides that they've got a 20-year relationship with the old owner, they don't know me from Adam, and so they're going to shop the business. And if I don't keep it, then my company's dead on arrival. Like I can't fund the debt and so at that point, it's there's other risks. I spoke to a company that had significant vendor risk where they pretty much their entire business was dependent on one vendor, and oh, by the way, that vendor happened to be a competitor. And they had a great relationship with that vendor, but that, for all I know, is very much on the fact that the vendor trusted the individuals in that business and they had a long-standing relationship with those owners, but they don't have that with me. And while certainly I'd like to think I could build that relationship and work with the seller and the customer or vendor to maintain it, there is no guarantee of it.
That's it's so great just letting you explain your thinking behind this stuff, because I know the people listening are going to love this. The business owners are going to begin to visualize how their business will be seen by a potential business buyer better. And it's so valuable because, like I said, that kind of stuff can creep in over time. That kind of stuff is, well, Damon's always done business with Jill, and Jill's awesome. They're friends, their families go out, whatever, for 20 years. We've known each other. And if that relationship is critical to the business, someone probably is going to look at it. Well, they aren't probably. You're going to look at it a lot differently. Like you said, it can be customer or vendor, or employee too. Because I'm sure that you run into situations too where you go, okay, this is a great business, but there's too many family members in it and things like that. That if you go, okay, if the father wants out and they've got, three cousins and 2 kids that are doing it out of 50 people, and those are in key positions, that's another thing. So one of the things that I don't know if you run into this, but I've always thought this. But I was going to see if I just came to me. So if you are in a situation that you considered that you're going to have to pay the owner, but they're going to stay on with the company in some other role, right?
Mm-hmm.
How much would you be weighing the fact that I'm going to give them a big chunk of money, and what is their attitude going to be like after they receive that big chunk of money?
Yeah, no, so my approach typically is, great if it happens, but I need to assume that it's not going to work out.
Yeah. There you go.
Yeah.
Because I had somebody was told me that it was an owner, and there were several owners, and they were all pretty integral to the business, and they were saying, well, we can keep working with the business and keep things going. I said, so how do you think it looks if somebody's going to come in and pay you guys millions of dollars each? What is your real reason to come to work and work as hard as you're doing today?
Right. Yeah, exactly.
and I just wanted to ask the question and let you explain it, because I don't know if they ever really did believe me, but it's perspective, right?
Yeah, it is. I mean, certainly you have business owners who are, they love coming into work. They're passionate about their business and their employees. And, it's something that they want to see the business succeed after they sell it. And, I absolutely believe that, their heart is in the right place, and they genuinely think when the deal closes that, yep, they're going to spend the next few years working hand in hand with this new buyer to, see this business grow and take care of their folks, and and make sure it's a smooth transition. But the fact is, like you said, at a certain point, there's going to be issues with the business. There's going to be a disagreement between the buyer and the seller. There's going to be, something that happens that requires the seller to feel a good bit of stress if they're in a senior management role, because guess what? That's just the nature of the beast. And when those periods of stress happen, either in the relationship between buyer and seller, or just in the course of running the business, understandably, the seller's probably going to have the thought of, why am I doing this again? I have more money than I know what to do with. Why am I not playing with my grandkids on a beach somewhere? Why am I putting up with this?
Yeah.
And, and it's just the reality that as a buyer, we've got to assume that however compelling and however convincing their argument might be, that they're want to stay on board, we got to just assume that it's probably not going to happen.
It's not going to work. Awesome. Well, the thing is, what are some of the good things you've learned, good things you've seen as you've gone through this about yourself? I mean, you said you underestimated stuff, but what are some things that you really learned about yourself? Because you had to have some soul searching moments where you just said, is this really for me? Am I going to be?
Yeah. So I think, certainly I've found, one thing I do want to mention, I think, is the model that I took with my search was a little different from the typical traditional search. Not only am I working with a single sponsor, but I'm working with a group that takes a different approach towards both, and by having a cohort of other searchers every year that you're working with. And so in my case, I've got 4 other individuals who are doing the exact same thing I'm doing. Maybe they have an industry focus that's different from mine. So in the office here in New Orleans, I've got a young woman who's former Army major that was in charge of all mental health services at Fort Bragg. 400 staff that she was managing, serving 85,000 family and service members. She's working in mental health, but it's one of these things where having an office to go to with peers that you can kind of, share stories with, complain about, your investors, your sellers, your deals that fell through, your analysts, likewise, prop each other up. And when a deal falls through, or when one of us is feeling a little demotivated, just knowing that you've got a group of other people going through the same thing and, cheering you on helps. I guess maybe the phrase is misery loves company, but it definitely, in my case, has helped propel me through this.
Awesome. Awesome. That's great. I mean, because I think you're right. You're right. Having people along with you helps.
Yeah, absolutely. And, so that was a big part of it. I think I, absolutely made the right choice working with the group that I did, because I don't know if I'd still be doing it if I was on my own. Frankly, the other things I found, I think, like I said, I definitely have felt good about the process that I've run. My email campaigns, I send out hundreds of emails, and I've got a 40 to 50% response rate.
Wow.
Now, granted, most of those responses are stop pestering me. Oftentimes not using such pleasant language.
Yeah.
But, it still is encouraging to feel like I'm doing a good job with my approach, and likewise to know that, I've developed some skills that I can really exercise and flex, hopefully with a higher conversion rate down the line as I'm building out sales pipelines for whatever company I buy.
Yeah. Well, this has been awesome, Thomas. I can't tell you how much I appreciate you taking the time to share with us, because, man, from the comments we're getting and just from me getting excited about talking to you, and surely the business owners that are listening to this, understanding that the perspective of a buyer, and in your case, how a search fund buyer looks at this, and the kind of work that you have to go through to get to a deal in the end, it's really commendable. And I just want you to know that I'm rooting for you, man, because it's cool that you're putting in the work, and you should succeed by doing the right things and keeping going. So,
for sure.
I just appreciate you being here so much. And if someone wanted to contact you, is LinkedIn a good place to get a hold of you, Thomas?
LinkedIn's a great place. I've also got my email and phone number on my website, I believe.
Okay.
And that's, I don't know if you can share that in the comments.
Yeah, I will share that in the comments. So we'll have that. But yeah. So if someone has a business that's in that inventory tracking, emission testing kind of business, and like you said, you want something with sticky revenue and great growth opportunities, they should definitely reach out to you, because it's good to put buyers and sellers together. That's for sure.
Absolutely. And likewise, if a business owner just wants to have a conversation about how it works and has a few questions, happy to have a, just candid conversation and give them a peek behind the curtains.
All right. Awesome, Thomas. Well, thanks for being here today. Thanks everyone for listening to the Faces of Business today. And with my incredible guest here, Thomas Campbell, just talking about, the trials and tribulations, for a better way to say it, of being a search fund business buyer. Thanks so much, everyone, for listening. We'll be back again next week. Have a great weekend, everyone.
Thank you.